All right. What's up, traders? What's up, tycoons? Super excited for today's video. We're going to go over a stock that has ran up over 250% since really the middle of March to now. And that stock is AQST. This is Aquestive Therapeutics. It's been highly requested as it's been, running up really large. I'm going to go over the bullish price targets we have in case it wants to continue pushing to the upside, as well as the major support levels we need to hold. If we do get a pullback to any of these levels, it will be considered healthy retracement territory to possibly continue the uptrend. And if we break below those, we could see a larger move to the downside and see a downside reversal. We'll take a look at the RSI as well as the MACD and how you can use these to help spot potential entries or exits based on certain conditions. We're also going to zoom into the smaller time frames, such as the 15-minute chart. This last one here is the daily time frame, okay? And if we zoom in, we do have a current chart pattern that I'm going to go over that we need to be aware of and be cautious of. So make sure to smash that like button, subscribe to the channel. Shout out to today's sponsor, Simply Wall Street. Towards the end of the video, we're going to use them, and it's a great platform that you guys can actually use to dive into the fundamentals. There's a lot of good analyst coverage of AQST, and we're going to dive into why that may possibly be. So if you want to use Simply Wall Street, there will be a link in the description or a pinned comment below, and you guys can get a 14-day free trial, and the first 100 people to sign up will get up to 40% discount on their membership. Now, full disclaimer, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals on this channel are not registered financial advisors. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss. It is not suitable for all investors. So be sure to read through the full disclaimer, and we'll go ahead and hop right into it. As I mentioned, it's up over 259% from the lows to the highs. All right, pre-market, we're at about 246 right now, slightly above where we closed. And what we're going to do is explain some of the things on the chart right here, right? So the reason I have these three yellow lines right here, the 38.2, the 50%, and the 61.8% level, is these are the three most common and well-respected Fibonacci retracement levels. And you use these because nothing moves in a straight line down or a straight line up. You get a move up, a retracement, a continuation of that trend, or a move down, retracement, continuation of that trend. So we've had this strong push up and we haven't had any type of retracement at all. So if we do end up retracing, these are going to be the three major levels to pay attention to: $2.05, 188, and 171. Now, 178 is also an important level because this is a previous bull cycle high. Right, when we had another bullish push up, this was our previous high. We can see that we've broken past this level. And if we were to come down and find support around this level between 171 and 178, that would be what's known as a break and retest of the previous highs. So that also would be very healthy. Now, as I mentioned, we really haven't had any down days, so this thing could still have momentum to the upside. 274 and 299 are going to be some of the targets that I'm looking at here currently if we want to continue this bullishness, right? Now, there are a couple things we need to be cautious of, all right? The first thing is that we're very overbought on the RSI. Now, above 70, which is this dotted line right here, is the technical definition of overbought. But just because something's overbought does not mean it can't go higher. As you can see here, we were also very overbought, and look at what we did. We've still exploded much higher. Right. So it's just something to keep, pay attention to, is that you can't really be surprised if we do end up seeing a pullback. All right. Because we are at these really overbought conditions. But now you guys know the major levels. Okay. We also have 228 above there. That is a former bullish price target, AKA resistance. And we can see if we can flip that resistance to support now and potentially head higher. Another thing that you can use to really, keep yourself, from potentially taking some big losses and FOMOing into this is the MACD, right? And so if you see right here, we have what's known as an exit signal when this red line crosses below the yellow line. That's typically an exit signal that happened right over here. And we dropped from about $1.40, okay, all the way down below 80 cents after that. So a really significant push down after we ended up getting that MACD signal. If we look at the MACD, it's showing lots of momentum and strength right now. But if you see this thing curl down below that yellow line, that could be a warning sign and it could be an exit signal. Again, if we dive into the 15-minute chart right here, currently what we're forming is a pattern known as a rising wedge, and price action is going to zigzag in this wedge until it breaks, right? Until it breaks structure. Now, typically in a perfect world scenario, this pattern would break to the downside and take you right around where the pattern began, which would be about that $1.90 to $2 area on AQST. But Just because we have a pattern forming doesn't mean it's confirmed. Okay, we can break this structure if we just consolidate sideways. That will void out this pattern. And also, if we break out and make new highs above this channel right here, that would essentially create a little bit more of a bullish channel rather than a rising wedge, right? If we put in a high up here and then a high up here, our trend line would look more like this. Okay, and it would look more like a bullish channel rather than a rising wedge. So, when it comes to the charts, when it comes to the technicals, those are a couple of the things that I'm looking at right now. Um, if we go ahead and head on over to the Simply Wall Street platform real quick, we can dive into some of the fundamentals. And if we look at the AQST stock overview, it's trading at 90% below our estimate of its fair value, right? And then so you can dive into that and look at the valuation. It gets a 5 out of 6 on the valuation. Specifically, you looked at the price to sales versus its peers. AQST is at a 2.9, all right, and the peer average is 25.2x. So it is a good value based on its price to sales ratio compared to the peer average. If you look at the price to sales ratio versus the industry, okay, it is also a fair deal right here, but it's at 2.9 and the industry average is 3.2. So it's below those metrics. This is the price to sales ratio versus its fair ratio, and it's at 2.9. The fair price to sales ratio would be at a 3.3. So it's a good value based on the price to sales ratio. Again, this is using the Simply Wall Street platform. All right, there's a link in the description below or a pinned comment. You guys can use that. And what I want you to do is actually look up your favorite stock or a stock that you're thinking of investing in right now. All you have to do is go up to the search bar and type it in, and you can get some very similar information and graphs. It's a really awesome, platform that I love using. I've been using for a while and glad to have them as a sponsor now, finally. Um, you can dive into things just a little bit more, right? Now, we can take a look at some of the future growth, all right, and see what it says there. It's got a 1 out of 6 on the criteria checks here, all right, and the only thing that it's green on is its revenue versus market. It doesn't really have high growth earnings, or the earnings versus market and earnings versus saving rate aren't great, and it doesn't have high growth revenue yet. All right, we can click on these a little bit more and get some more information. They are forecast to remain unprofitable over the next 3 years, and their revenue is forecast to grow slower than 20% per year. So, it will give you the good, and it'll give you the bad and the ugly as well. Okay, you can look at the EPS forecasts right here, and what's really great about the platform is that it gives you some nice graphs and visuals to understand the things, just in case you can't, really understand fundamentals too well just by reading a couple sentences. It will go ahead and give you guys, some nice visuals here. It also dives into the management and ownership. So if we click on that, it'll give you the management criteria here. It gives you the compensation that their CEO gets. So you can see that the CEO gets about 1.3 million in total compensation, many different things. So thank you guys for watching the video. Hopefully you enjoyed it. Smash that like button, subscribe, and don't forget to use the link below to get a 14-day free trial for Simply Wall Street. And the first 100 people to join will get up to 40% discount.